Time to see what's on the radar for Allan Small, Senior Investment Advisor at Allan Small Financial Group, IA Private Wealth. And Allan, you've got three specific areas of the tech sector on your radar: chip equipment companies, memory chips, and storage companies as well. Let's start with the first one that you're liking, Micron.
Yeah, so Micron, it's a name that obviously benefiting from memory and the opportunity to raise prices because memory chips are in high demand and short supply, and they've been able to raise prices. So all the memory chip companies have been doing extremely well. SK Hynix and Samsung is out. Right before we came on here, I mentioned
it's giving some competition to Micron.
To Micron. So it's been a hot area, and what's been good for a name like Micron has been bad for other companies like Dell and Apple and HP, because they need memory in their devices, in their hardware, in their servers, in their computers. And so what's been good for the memory companies, they've been able to charge higher prices. Now these companies have to pay those higher prices. They're actually suffering for that. So memory has just been one of those areas, as you can see, Micron, a bit of a pullback in the last week or two. But overall, it's just been going like gangbusters. A name that, it's interesting, once that there's a bit of a glut in memory chips, once supply catches up to demand, you tend to see names like Micron really pull back hard. So again, very aggressive move forward can be followed by an aggressive move to the downside. So I would recommend taking profit along the way as Micron, names like Micron in the memory chip business, as it continues to move higher, I definitely would trim some of those profits back.
Okay, and then the second round, chip equipment, memory chips, Western Digital, SanDisk, and Seagate.
Yeah, so these are storage companies. Obviously, you need some place to store the data, and storage companies have just been knocking the lights out, home runs all over the place. I think at one point, SanDisk was up like well over 1,000% in a couple of months.
It's soared in the last little while.
It's unbelievable. Western
it's like
Digital,
people forgot about it.
Yeah, and we all did. And name Western Digital, you have up on the screen now. Just look at that chart. It's just unbelievable. It's just the run that these names, Seagate, another one that these names have been on. Again, you just need the storage to store the data for all this information, the AI, the data centers. And the question is, do you get in at these levels? Again, I think if you're holding these names, you continue to trim those profits, take some profit off the table. I don't know if I'd be an aggressive buyer here. I've seen some targets from some analysts a little bit higher. But for me, again, I think you can never go wrong taking some profit off the table. I don't know if you want to get totally out of these names. I think there is more room to run perhaps, but I think you want to trim back some of these profits.
As you're doing it. And last one I want to bring, last two, Lam Research and Applied Materials.
Yeah, chip equipment companies, right? These are the companies that make the equipment that make the chips.
Yeah.
And Lam Research, a name that maybe not too familiar for a lot of investors. Again, just a crazy run that they've been on. Applied Materials as well. Another run. These two companies, these are the two big ones in the world today, benefiting from the equipment that's necessary to create the chips. And the more chips that are necessary, as we know, there's a shortage right now, whether it's Taiwan Semi saying they just can't make chips fast enough, all the chip companies saying they can't make chips fast enough. How much demand are these equipment companies, how much the demand for these companies exists today? It's quite a bit. And it's tough to get in at these levels, but I think you can nibble at some of these names. Applied Materials may be a little cheaper than Lam Research right now, but these are two names that I think make sense for really any growth portfolio, especially if we see a bit of a dip.
And any concerns about demand either easing or AI somehow having an impact on them?
Well, I think demand, it looks like we won't see an ease in demand for a little while as yet. A lot of companies now talking about demand being strong all the way out to 2027 and even maybe even a little bit beyond that. So at least for the foreseeable future, demand is strong, AI, chips, semiconductor, all of that. And if you're owning any companies anywhere in that industry or dealing with that industry and that sector, you're going to be doing quite well.
And what could be a headwind?
It's tough to say. Obviously, at some point, I think the headwinds end up being these companies themselves, right? You're priced to perfection. You can make the case that these companies will continue to do better and better and better. The question becomes at what rate? How fast are they growing their earnings? If they're growing earnings 30% now and they grow earnings 28%, like we saw with Microsoft next quarter, market will sell off because maybe they're saying 30% is as good as it gets. So you almost become a victim of your own success. And I think that is, to me, the biggest fear. These companies will continue to do well. They're fantastically run, great management. But how much longer can they continue to grow earnings at the pace they're growing? Whether you're an NVIDIA, a Taiwan Semi, a Micron, at some point you become a victim of your own success and you pull back maybe a few percent. And then the market says, well, is this as good as it gets? And they sell your stock. So got to be careful about that. Nothing goes to the moon. No stock goes up to the moon. So got to watch for that. But I think these companies will be doing quite well, as I said, maybe out till 2027 and a little bit beyond.
All right, we'll leave it there on that note.